top gainers this year, and one of them is Ester Industries. These are not companies that we talk about very often, but these are companies that have created huge wealth for shareholders. Just pull up a one-year chart. This stock is up almost 400% year to date. And just for the benefit of our viewers, this is a company that is engaged in the manufacturing of polyester films, engineering plastic compounds, etc. And it's a company that's based in Haryana. Arvind Singhania, the chairman of Ester Industries, joins us now to talk about the way forward for the company. Mr. Singhania, good morning and thanks for joining us. It's been a great wealth creator for investors. So one would like to understand what the triggers are going forward for the company.
Well, primarily it's all technology. You know, we have been in commodity-based businesses for the last 25 years plus, which is basically polyester film and engineering plastics. And about 4 or 5 years ago, we changed course because we didn't see any future in being in the commodity business. And we went down the technology route. We started a specialty polymer business, which is basically for PET specialty polymers, which serves applications across rigid packaging, flexible packaging, industrial applications, carpets, textiles. So the entire gamut of applications that polyester serves. And this is basically all technology based on R&D. So we started this division about 5 years ago. And this is what is going to take us forward in terms of the future is going to be all technology driven.
Okay, but good morning, Mr. Singhania. At the moment, your split in terms of segmental revenue is still polyester chips and films, giving you about, three-quarters of your revenue, 161 crores, and engineering plastic revenues only 41 crores in the just ended quarter, that is in the second quarter. When does this split become even 50-50?
You know, engineering plastics and polyester film are both commodity businesses. The specialty polymer business has just started taking off.
Okay.
In fact, last 5 years, we spent time on developing products and technology through R&D. And last year, we did a turnover of about 20 crores. This year, we're doing about 75 to 80 crores. So going forward, it's going to grow exponentially. And it's going to form a majority portion. Very soon, it'll become a very large portion of our total top line.
What will be the EBIT margins for the specialty polymers?
The EBITDA margins going forward would be in the region of about 30 to 40%.
Only for this, for the specialty polymers business?
Only for the specialty polymers business.
And for the legacy businesses, what are the margins normally?
Normally, we've had about 10 to 11% in the past. And being a commodity play, this fluctuates. So, you know, in good years, you can go up to 13, 14, 15%. Well, in 2010, we had a boom where we saw margins of up to 25, 30% EBITDA margins. But normally, they remain about 11, 12% under normal circumstances.
Okay, so you were saying that the specialty polymer business revenues are now standing at 75 to 80 crores and will grow exponentially. When you say grow exponentially, in the, say by the end of FY17, where do you see the revenues of the specialty polymer business?
I think FY17 we are expecting revenues to grow to about 200 to 220 crores from this business itself. And going up to FY19, FY20, we expect this to grow to about anything between 600 to 800 crores.
Okay. So it'll be about FY18 by the time it becomes half your business?
Yes, that's true. By about FY18, it should become nearly half our business.
Okay, so you said by FY17, only this business will contribute 200 crores. What about the rest of the businesses? Consolidated, how do you expect your revenues to shape up by FY17?
By FY17, we expect to be in the region of about 1,100, 1,200 crores.
Okay. Of total revenues?
That's right.
And what about the margins?
Right. Margins, like I said, the specialty polymer business margins will be in the region of about 30 to 40%. And the film and engineering film will be much lower, of course. It's a commoditized business.
Okay.
So that will be in the region of about 10%, 10.5%.
Okay. How much would you have to plow in to remain in the cutting edge of this business? A lot of R&D expenses are expected?
Yes, we are going to invest substantially in R&D. I mean, that's the core and the fundamental, the foundation of this business is all about R&D and technology. So we are going to put in a lot of money. We expect from this business itself, we'll put in about 2 to 3% of top line going forward towards R&D.
So would you need to at any point raise any fresh money? I mean, I don't know exactly what the cash on your books is. What is the debt? Any fresh fundraising that you would want to do?
No, at the moment we don't foresee raising any funds. We don't require any funds. All the funds that we need, all the capex that we need has already been made in the last few years, and we don't expect any major capexes to happen for the next 2 to 3 years.
Okay, so can you
So we don't see the reason to raise any funds.
All right. Your long-term debt, I understand, is about 107 crore and short-term 182 crore. You see that getting pared down?
Yes, as we go ahead over the next few years, we'll keep on paring down debt.
Okay. Can you help us understand how your blended margins will move? Because these are two different margin segments altogether. You said your legacy businesses are 10 to 11%, your cutting-edge business is 30 to 40%, and it will soon become half your business.
That's right.
So what's the current blended margins? What will it be in FY18? And what does it become in, say, FY20?
Well, FY20, we expect, as this business grows, the blended margins will keep on improving. So if you talk about FY20, we're talking about a blended margin of around 17 to 20%.
Okay. You did mention that FY17 revenues would be 220 crores from the specialty polymer business, but I didn't get the figure for the overall business. What did you say that was?
It will be about 12 to 1300 crores.
12 to 1300 crores for the overall business.
That's
All right. Okay.
We expect about 700 crores from polyester film, about 250 crores from engineering plastics, and 200 from this. So about 1200, 1300 crores.
Okay, so what will your earnings look like, say, in FY17, FY18?
You see, we'll start building critical mass now in this financial year of 16-17. That's when we expect to build critical mass. And and this will really be the first year we'll do some substantial business. I mean, for example, I told you we did only 20 crores in specialty polymers last year. We'll do 75, 80 crores this year. We'll grow to 200, 220 crores next year. And that's the exponential growth we see going forward. So as we grow forward, our blended margins will keep on improving because most of the growth is coming only from the specialty polymer business.
But give us an idea of the earnings. You know, your net profit in the first half is 7.8 crore compared to 3.8 crore
Right.
all of FY15. So, you know, what kind of an earnings growth can one expect? You've got about your EPS was, less than a rupee. Do we get to what, 2-3 rupees in the current year itself?
Actually, we got a lot of support in the first half from the polyester film business, which was very good. We don't expect that kind of support to keep on for the second half of this year from polyester film business. So, March 2016 is really around the corner, and we don't expect the margins to be as good as first half of 2016.
Okay, just one final question before we let you go. You have two of these brands, right? Umapet and Estoplast. What is the market share that you enjoy in both these businesses, and has it gone up in the recent past?
No, these brands in industrial product business, brands don't have that much of importance as you do in consumer product business.
Okay.
So these are industrial brands, and Estoplast is for our engineering plastics business, Umapet is for the film business. So these are industrial product brands, and they don't have much value in terms of as you would in a consumer product.
All right, we'll leave it at that. Thanks so much for joining us, and all the best for the quarters to come. That's a big upside that Ester Industries is expecting in their earnings. They expect revenues of 1,200 crores overall in FY17, and a big chunk of that 200 crores first in FY17 from the polymer business, but it'll grow to half of the business in the next couple of years. But let's